and the functionality of both of them together is just, I don't have words to convey how excited I am about this feature.
Hey, what's up guys? Kevin Cage here with another crypto update. We're going to dive into XRP and a few other alts. So that clip was David Schwartz at Apex a while back, and now we have some huge news related to the XRP Ledger AMM network or automated market maker that is officially live on the DevNet. Now what's interesting is David Schwartz says, I'm personally more excited about this feature than any other proposed XRP Ledger feature in the past 10 years, meaning that's a big deal. So huge shout out to James Rule for providing this YouTube clip during the XRP Ledger Apex Summit back in 2022, going over some interesting features.
Now something near and dear to my heart, the automated market maker specification. I almost said automated money maker, which actually is kind of, it's actually pretty apropos, right? So the XRP Ledger is a leading enabler of DeFi with features like the DEX and payments because of the design of the protocol. And the one thing that we have not had that traditionally most, I think 90% of DEXs have automated market makers. They're built around it. The XRP Ledger's DEX is built around a simple central limit order book rather than an automated market maker. But I think if you have both of them, I think this is a case where it just blows away OR. The automated market maker addresses most of the pain points that people face in the decentralized liquidity landscape today. So the DEX launched in 2012. It allowed tokenization of any kind of asset and the ability to trade and move them in just seconds on chain. It provided like globally competitive liquidity, but there was no way to get yield, and sometimes there just wasn't the sort of liquidity that people might need. So RippleX focused on differentiating our DEX with automated market making in conjunction with the central limit order book and integrated with payments so that these three features work together to provide a feature set that is unmatched. This is not everybody else has automated market makers, now we have them too. This is everybody else had automated market makers because they couldn't build an order book. Imagine an order book on Ethereum. If you think about how order books work, as prices change, people place offers at different rates. They cancel previous offers. If it costs you $13 to place an offer that nobody's likely to take, just to provide liquidity in case someone needs it, that's completely untenable. If your transactions take 10 minutes to confirm, you can't track price changes. We have our own order book because we can, and the functionality of both of them together is just, I don't have words to convey how excited I am about this feature.
Okay, so there is so much to unpack there. So basically, David goes on to emphasize that combining a decentralized exchange that is already native to the XRP Ledger on top of a central limit order book plus payments. Then he goes on to explain with Ethereum, and if you're trying to set a bid or an offer and you have to pay a gas fee and then have to wait 10 minutes for a transaction to execute, even if it took 2 minutes, that is too long. So once again, Bitcoin is the store of value. It gave birth to the crypto asset class. Ethereum was born with smart contract capability and logic built on top of it for business use case. But the gas fees are still too high, it is just not practical. And even if Ethereum hopes to update to Ethereum 3.0 in the next 5 to 7 years, in my opinion, it'll be far too late. There's going to be a variety of other payment networks that are already built to do this at scale. Cough cough, the XRP Ledger. So for anybody new, I think that Bitcoin is still here to stay as the store of value. I don't think it's going anywhere anytime soon unless there's some crazy black swan. I also think Ethereum is here to stay. There are thousands of projects and ERC20 tokens built on top of it. I'm just a huge believer that we don't have to stop at just Bitcoin and Ethereum because there's maximalism. We can continue to improve this technology. I'm a huge believer there's going to be other L1s that eventually flip Ethereum in the future. I know a lot of these major networks in the top 10, they have the first mover advantage, but overall, when it comes to actual adoption and enterprise use case, you've heard from a variety of sources that one true enterprise application can have more transactions than the entire Ethereum network. So we're talking smart contract platforms, Casper, HBAR, you name it, your favorite project. But I'm talking as well for payments. I believe that XRP has this in the bag. The XRP Ledger, 10 years old, no downtime, unlike Solana. And although they're working on smart contract capability and that will come, they are focused on payments, the future of finance. And keep in mind, the tokenization stats for assets is going to be in the trillions as well. There's over $155 trillion sent across borders globally. Now, as David said, this isn't something that was just pulled out of a hat. This has been a plan for a long time. This is the secret sauce. You have a specially built DEX with AMMs with a central limit order book integrated with payments that are highly scalable, using a much more efficient and smarter consensus mechanism. So in terms of decentralized finance, yes, it's kind of fun, it's early internet days, but we have not seen actual adoption at scale. And it's my belief, of course, in a multi-chain future, but imagine a global pool of decentralized liquidity that anybody, not just banks, not just businesses, can participate in for the future of finance. So this is massive. And this XRP Ledger AMM feature, if successful and built properly, could be the winner. So, okay, really quick to skim through this amazing thread that was put together by Lachlan. If you guys want to do some more reading, I highly recommend, and I'll link this in the top of the YouTube video description, the blog that this gentleman made. And we can see the XRPL's new automated market maker. And then I'll also link right here on XRP.com the XLS30 discussion proposal. And this was back in January, just to get a better understanding of some of the very unique features and how it would differ from AMMs on other networks. I do believe this could be one of the most successful AMMs in the entire crypto asset class. And the cool thing about this is if you hold XRP, you could use your XRP to earn money and actually just put it up and be a liquidity provider and have an LP token. So super interesting. You're no longer going to have to put, XRP and on XRP or a token pair at a 1-to-1 ratio. You could do single provisioning of a specific token, in this case XRP. So imagining a giant decentralized pool of liquidity and XRP, keep in mind this is on the XRP ledger, being one of the main token pairs. This is huge. So we have some key features right here discussing the no MEV. This is maximal extractable value. I definitely encourage you to take a look at, Binance Academy to better understand this in the mining days. In terms of today, it's more relevant for smart contract platforms. We have protocol native automated market makers. We have single-sided liquidity provision, which we talked about by being able to provision just XRP or another asset in deposit and withdrawal. And remember, it's going to be instant, unlike Ethereum. It's going to be very cheap, if not near zero, unlike Ethereum. We have continuous auctions. It's going to move a lot faster and more seamless, of course. Because the XRP ledger, although it did not get like the huge level of adoption that Ethereum has as a smart contract platform, Ethereum is stuck right now. Yes, it can still go up, multiple 100% long term, but I'm placing my heaviest bets elsewhere. I mean, even just considering Ethereum from its all-time low, it already went up over 1,000,000%, which is just crazy. And then we have the CLOB, I'm just going to say CLOB, but it actually stands for Central Limit Order Book Functionality. So there's no MEV or front running because these two features, the XRP Ledger Federated Consensus, so the subset of nodes, the UNLs, is the unique node list. They agree on transactions rather than a single validator prioritizing based on gas fees. So with other networks, if they pay a higher gas fee, they actually get priority, which does not make any sense. We have canonical transaction ordering. This is just transactions are ordered in a deterministic, hard to predict manner. You have a protocol native automated market maker network. And this is at the blockchain level with liquidity shared across the chain. Keywords right here, anyone may create a new XRP Ledger liquidity pool that the whole ecosystem may use, and those building on the XRP Ledger can then integrate DEX interfaces without bootstrapping liquidity. Single-sided liquidity provision, so LPs or liquidity providers, remember when you put together a pair, say it's XRP and USDC at a 1-for-1 ratio, instead of having to put both of them together, you can actually do a single deposit of just XRP or just USDC into a single asset pool to get your LP token or your liquidity provider token. So with half of its value automatically converted into the paired asset. So that's super interesting how they do that. So right here is an example. Deposit $100 of XRP into a USDC XRP pool with 50% of the XRP being automatically converted and swapped into USDC to maintain that 50-50 split or a 1-for-1 ratio. That is genius. We have continuous auctions, so these arbitrageurs may bid for 24-hour window slots for near zero trading fees. Bids are partially distributed amongst the automated market maker pool, compensating the LPs and reducing impermanent loss. And then we have the central limit order book functionality. So this new AMM now incorporates both a central limit order book as well as AMM pricing, with the best available price being executed for any given transaction. So how I understand it is we have a limit order book in tandem with automated market maker pricing, and it will choose the best available price for executing any transaction or swap. And I think this is pretty exciting. I mean, just imagine the future of smart contracts with machine learning and AI and leveraging agents. I can't imagine. I'm excited to see where this space goes in the future. So anyways, Lachlan has this entire blog to dive into this, and I will link this in the top of the YouTube video description to go over it in much more depth, and he has a much better understanding of it than me. But I'm trying, so I'll keep reading. Also, I know I shared this on Twitter yesterday. If a layer 1 in the top 10 like Solana or ADA made this type of announcement that Casper made, the community and the news outlets would go insane. Yet when Casper does it, nobody bats an eye. It's still under the radar. We have RippleX sharing that these sidechains are available on the DevNet. We have Gary Gensler right here in this clip shared by the ZK Shark, that in many other jurisdictions and markets, Not everything is a security. It's just a commodity, cash, or crypto. Listen up.
So we already know in the US and in many other jurisdictions that 3/4 of the market are not ICOs or not what would be called securities. Even in the US, Canada, and Taiwan, the 3 jurisdictions that follow something similar to the Howey test that we've talked about, 3/4 of the market is non-securities. It's just a commodity, a cash crypto. So you'll hear debates about initial coin offerings and what's a security and what's not a security. Relevant and important debate, but for 3/4 of the market, it's not particularly relevant as a legal matter.
And that clip, ladies and gentlemen, was before Gary sold his soul. Also, Hyperledger Foundation announcing over at Consensus where they're presenting, we can see IBM, Casper Labs, Deloitte, one of the big 4. We have Filecoin, we have Soramitsu, and a few other organizations. We have Phantom Foundation sharing that the API3 DAO, which is one of their partners in tandem with Alliance Block and a variety of other ecosystems, has built first-party oracles to provide DAPIs, decentralized APIs that are decentralized, scalable, and on-chain data feeds. And they're providing some tutorials below of how Phantom builders can activate and utilize self-funded DAPIs. And yes, I still hold a good amount of API3 that I'm staking. I believe APY is still around 19 or 20%. We have some big news from the HBAR Foundation, excited to announce that the new Google Cloud Web3 startup program has launched with benefits for builders on the Hedera network. This will enable startups to build world-class scalable applications with the resources of Google Cloud and the HBAR Foundation. Also saw this amazing post by the X Frontier, a must follow. Casper Labs collaborating with 2 of the biggest global cloud service providers. So Google Cloud, of course, and fun fact, and this was proven, that Google Cloud approached Casper. It was not the other way around. And of course, Amazon Web Services. And these 2 partners combine for 45% of the market share, almost half. Now, what makes Casper so special? Well, they actually built everything to scale and be upgradable, and it's extremely simple to use, unlike other projects. There's a lot of L1s that build a solution that's similar to Ethereum or, leveraging Ethereum's virtual machine, and it's not unique whatsoever. It's not secure, it's not scalable, and Casper built this with in mind. And Casper built their own virtual machine from the ground up, as we can see right here. The virtual machine is built using WASM. This is WebAssembly, which was developed by the W3C. And of course, the XRP community is super familiar with the W3C. And in terms of bringing builders onto blockchain, so Ethereum accepts Solidity, that's 300K developers. Casper Network and any serious layer 1 that actually wants enterprise adoption, which I believe Casper is going to be a true winner, uses WASM because it accepts 30 million developers. They're going to bring a huge chunk over to be building on blockchain. Yeah, retail communities are cool and, some retail use cases are cool, but we need the developers to come. We need to build it so the enterprises and actual adoption can come and scale. So what does this mean? It will accelerate the adoption of blockchain by enterprises and Web 2 developers. We have to get more Web 2 devs over to Web 3. This will enable enterprises to quickly architect and deploy a network configuration of their choosing. Keep in mind, it can be hybrid as well, while receiving Casper Labs professional services. The enterprise customers that need to have customer support have a phone number to call. They have a team that is supporting them, consulting them, and staging solutions to build at scale. This is real enterprise adoption and how an actual network should work. I know there's some cool decentralized tech that exists out there, but this is the real deal. You have to meet enterprises halfway. And if you guys know Casper's pedigree, I have 45 plus engineers working on Casper's network and growing. There are projects in the top 100, top 50 that don't even have anything close to Casper. It is just a matter of time. This allows for seamless onboarding of devs looking to build on blockchain, providing them with Casper native smart contracts and all on-chain capabilities without needing to learn new highly specialized programming languages. I was going over a recent Ripple report streamlining global treasury flows. Remember that on-demand liquidity right now, with XRP as the bridge asset, 60% of RippleNet transactions is going through ODL. We just need one catalyst in the market to change everything, cough cough settlement. We can see according to the World Bank showing that imports and exports of goods and services to and from Brazil, Mexico, India. Interestingly enough, we know that Ripple is deep in all 3 of these countries, reaching more than 290 billion, 500 billion, and 700 billion US dollars respectively. We can see India right there and Mexico, two of the top 5 receivers for inbound remittance flows, with India retaining the #1 spot for almost 15 years, one of the BRICS nations. Now, a few other interesting things, guys, please stick around. So we have Johnny Deaton. The reason I acquired XRP in 2016 was because of its use case for cross-border payments. Truth be told, I bought more in 2019 when Coinbase not only listed XRP, the digital asset, but highlighted its utility. We have a screenshot below. While China reduces demand for the dollar, the United States is attacking, not embracing, the crypto's utility. So this is actually a retweet of Watcher Guru sharing that the Chinese yuan overtakes the US dollar as most used currency in China's cross-border transactions for the first time in history. This is history being made. And in this screenshot, this is when this was on Coinbase's website, and send money internationally for free, virtually, instantly, XRP or USDC. No fees to send or receive XRP. So they were highlighting XRP back in the day. We can see including India, Mexico, and the Philippines, all where RippleNet has a heavy presence. Interesting. So talking about additional utility of XRP as a payment token. We also have Barath Economin. So the KFH, this is the Kuwait Financial House, is a Ripple partner, has been fairly quiet since their partnership announcement. This end of year 2022 corporate profile was released that continues to highlight their RippleNet use. So you can see that the Kuwait Financial House is considering to benefit from main fintech global trends, money transfer, insurance, savings and investment, borrowing, financial planning, and blockchain tech, e.g. Ripple. In terms of borrowing, like think lending, think line of credit, which specifically uses XRP, there's all types of potential use cases for crypto assets in this ecosystem. Yeah, they can still transact with fiat or, digital currency and central bank digital currencies, but there's going to be stable coins, CBDCs. But if I didn't say this already, I just want to emphasize there's going to be a variety of categories, and crypto assets is going to be complementary to all of these asset classes, whether it's a utility token, a security token, a payment token, and any new type of classification in the future. And last but not least, we have iTrustCapital linked in the top of the YouTube video description. If you use that link down below and you fund your account, which is completely free, you also get a $100 funding reward. Now, remember, this is not just a couple dozen cryptos and precious metals. iTrustCapital has some huge things on the way, leveraging a Roth IRA, so you're paying 0% in capital gains. So this is tax-free trading and investing. And they recently made the announcement they're going to be offering other tokenized assets, private placement, and fractionalized real estate in the future. So I'm excited since they're a first mover in the space. They got another $100 million in funding, I believe, over a year ago, and they're valued at $1.3 billion. So feel free to check it out if you've never heard of it, link down below. Hope you found this video interesting, and I'll catch you in the next one. If you enjoyed this video, I'd greatly appreciate if you could hit the like button, let me know your thoughts down below, and my link tree is linked in the top of this YouTube video description, with all links, crypto resources, and discounts. I'll catch you in the next one.